And now I'm going to invite to the stage my panel of CEOs. Don't forget, these are the men and women who've got to implement this and got to make it work. So please can I have my CEOs panel on the stage now? Yes, okay, good. Well, look, thank you very much. This is a very impressive panel. So I'm going to, first of all, introduce the panel. And then in the next hour or so, we're going to sort of attack the principles from different angles. And obviously, what we want to do is sort of, get under the skin of how this thing's actually going to work in practice. So it's not just a piece of paper and an idea. It's something that we're really going to run with. And there's going to be lots of times for questions. So please, this is going to be an opportunity to question a very esteemed panel. So make sure you participate in that. Okay, so let me start by introducing everyone. And perhaps you could just kind of nod when I mention your name so we all know who you are. So I have Tengku Zafrul Aziz, Group CEO of CIMB Group from Malaysia. I have Munkhtsetseg Chultemiin, who's the chairwoman of Golomt Bank from Mongolia. I have Shu Gu, who's the president of Industrial and Commercial Bank of China. Thank you very much. ICBC, by the way, in the bankers' top 1,000 ranking, always comes top. Then we have TP Nchocho, who's the CEO of Land Bank from South Africa. We have Casper von Koskull, the CEO of Nordea from the Nordics. We have Christos Megalou, the Chief Executive of Piraeus Bank from Greece. We have Yong-byoung the Chief Executive of Shinhan Financial Group from South Korea. We have our host team player, Frederick Udea, who's the Chief Executive of Societe Generale. And we have Peter Blom, who's the Chief Executive of Triodos Bank from the Netherlands, famous, of course, for being an ethical bank. So let me kick off by talking about, really, the sort of recovery of the banking sector from the financial crisis. And let me get your thoughts on this, Frederick Udea from Soc Gen. I mean, the banking industry, it's lost a lot of trust and legitimacy. Do you see these principles as a way of reestablishing trust with shareholders, clients, and sort of gaining legitimacy in broader society?
Well, first of all, good morning to all of you. Delighted to participate to this panel, and welcome to Paris, which I hope you will find in a peaceful city compared with maybe some images you had during the weekend. But we are like this in France, don't worry. It comes and goes. Now, we have touched already a little bit about this question, and it's fair to say we are now 10 years after the beginning of the financial crisis, and banks had to regain trust. And as we've said, there was all these elements around a new regulatory framework, a new way of doing business, really to draw the lessons of the crisis. And I must say, as it is acknowledged, I think, across the world, and in Europe in particular, in here I'm talking on one hand as CEO of Societe Generale, but also as chairman of the European Banking Federation, a lot has been done. And I think now banks are certainly, from that perspective, on one hand, more robust and certainly more responsible. But I think that the idea of these principles, and I would say the capacity to commit to this world, or the transformations which are at stake in this world, which at the same time is more uncertain, more volatile, less coordinated maybe than what we have experienced in the last 20 years, is effectively to regain trust and further build trust in something which is more positive. And when I say trust, in particular, again, in this world, I'm convinced that it's it's maybe our best and core assets. We as banks, as institutions, where we are committed with clients, what is making the difference is the trust that our clients have in our institutions, whether it's for wealth management, the way we finance things, etc., the way we accompany in the long term our clients. And I would say really now, I think we are to a certain extent able to turn the page, if I may say, of this period of remediation to the financial crisis, and effectively try now to collectively, as much as possible, collectively engage in accompanying our economies, our clients, in this journey, because when we talk about, in particular, climate change, it is going to be a journey. We are not going to do that in a few quarters, but effectively do that responsibly, and it corresponds, I think, to the expectations of our clients, of our staff. I mean, our staff is also willing to engage, and more generally speaking, all our stakeholders. So I see that as something very positive, and we are certainly committed. I can tell you that European Banking Federation endorses these principles, and of course, on behalf of Société Générale also.
Okay, thank you. Let's go now, because we're such an international group, let's go now to Malaysia, and Tengku, Zafrul, Aziz. I mean, Malaysia is a country I know very well, actually, and we've all seen it go through these rapid changes and grow very fast, which of course is great for economic development, but also poses environmental challenges. So how do you see CIMB's role in ensuring that that sort of development remains sustainable, and how would you see these principles being put into practice in your bank?
Thank you. Well, for us, we're not just looking at Malaysia, and CIMB is, of course, a leading bank in Southeast Asia.
Of course, yeah.
So what we want to do is to create that leadership, not just in Malaysia, but also in this region. Of course, we are uniquely positioned to do this. We just started on this journey. We've been engaging our clients, our regulators, our government on this. And we feel that all parties need to be part of this initiative. The principles are there to support and guide us at all levels of sustainable maturity. So we need to lead by example. We've started to engage our board, our directors, our shareholders, and most recently, we've tried to link some of the CR to SDG. We're teaching our clients to be part of the ecosystem. We've started putting aside 1% of our profit, for example, to do this. But it's interesting that I also heard just now about linking the compensation, the culture, which is the DNA of banks, right? I think that's something that we should do, and we've started that, creating the right culture and value system within the employees as well.
Okay, and have you actually linked the compensation to?
We have started that, doing that. Of course, we have challenges internally as people are, challenging some of that. But I think in the longer term, they will see the benefits of doing this. We've started by country. Of course, we are in all 10 countries in Southeast Asia. What we've decided is we've started this in Malaysia and Singapore first.
And was there any resistance from the shareholders to using 1% of the profits for this purpose?
There was no resistance, to be honest. There was some questions on some other minority shareholders, right? But I think our majority shareholders are keen, as long as we are clear on what that money is going to do, where it's going to be channeled to, and how it will benefit the society.
Okay. Let's now turn to Mr. Cho from Shinhan. Obviously, congratulations on being a founding bank in the Principles for Responsible Banking. But what do you believe is the impact of banks and financial institutions on society and in the environment? And what do you think is the role that finance should play in this?
Thank you, Mr. Casper. I would like to first comment on issues around us that need to change our views. Social and economic polarization is getting bigger around the world, and there is growing awareness if these issues are ignored. Companies cannot maintain sustainable growth. Low growth, excessive debt, aging population, youth unemployment, and climate change are potential threats that cannot be ignored anymore. Under these circumstances, society expects from companies in different ways. The financial industry is the blood vessel of the economy. A fundamental role of the finance is to support the real economy, a very important role. In this sense, I believe that how financial companies set their lens for the real economy, decide the size and the direction of the impact to the society. If we replace the lens into a longer time frame, shift our thinking from financial focused into integrated thinking with the ESG principles and realign the ESG activities as our core business development, then a better future is possible. Under this view, Shinhan is pushing CSV management principles, generating economic value and producing values for society at the same time. Our management system and the corporate culture of the past was to optimize growth and profit making. But now, we are evolving with the focus on a longer term sustainability. We have established the mission of compassionate finance, your companion for the future, our unwavering management philosophy. Under this mission, we are strengthening our inclusive and productive finance activities, providing services to the underserved population and the small business. Also, by thoroughly analyzing the impact of our activities upon the environment and the society, by investing in renewable energy and the social enterprises, we are continuing to implement our responsible management principles. If we seek a way of coexistence between finance and the society, and the seek way of financial institutions across the global working together, I believe we can witness big change, creating solutions to the challenges we all face. Thank you.
Thank you, Mr. Cho. Interesting there to hear about the idea of compassionate finance. I think that's very important. I'd like to now go to Christos Megalou from Piraeus Bank. And clearly, I mean, the big thing here is you've got to keep your shareholders and customers happy with this, haven't you? So obviously, for you to take these things on board, there has to be an understanding that these principles are going to do something for the main stakeholders in the bank, i.e. the shareholders and the customers. So perhaps you could give us a bit of an overview of how that's going to work at Piraeus.
Thank you. Thank you very much. Good morning, everybody. The one thing that we have experienced as doing business in Greece was that Greece has continued in its crisis, following the recovery of the European banking sector, and is just emerging from the crisis. And one of the lessons that we have learned in relation to what we were doing in the past has to do with social inclusion, with being a lot more compassionate to the units of the society that were in need. So one of the things that is really very important for these principles that we are launching today and has a real value for all of us, but having also coming from a country where it has pretty very recent scars of the crisis, is to be able to do this without essentially doing the mistakes of the past. So economic growth will have to come hand in hand with social cohesion and the environment, which is the main reasons why we are supporting these principles, and we are one of the members that have contributed to where we are right now. This has been discussed and explained with our stakeholders, and has to be even more so, and is actually getting quite a lot of approval internally in the country, because a lot of people really think that we should be avoiding the mistakes of the past.
Okay, thank you very much. And let me now turn to Peter Blom from Triodos, because, I mean, Triodos set itself up as an ethical bank. So this is all old hat to you guys, isn't it? I mean, can you tell us, you know, what this brings that's new, and what you think the significance of it is?
Well, first of all, it's great that it's happening. When we started Triodos in 1980, I really started the bank as a social activist, and I thought money was the best way to change society. And you see what's happening. We were a niche bank at the time. Our colleagues thought we were a niche, and we became more and more a front runner. And I like that change. And what I see happening today, that we have many followers, and actually it's not just us, but there are many others who made finance as a much more important factor in society. For a long time, that was not the case. It was just following the real economy, but now you can really see the change, and my colleagues in banking, big banks, small banks, they really get it, and they like it, they enjoy it, and they really see a role for finance in the change, in the huge change we see in front of us. And I really think that it's for a front runner, that's a really nice thing to see and to happen. So congratulations with this initiative.
Okay, good. Now, if I can go back to Frederick O'Dea of SocGen, I mean, there was some talk this morning about, you know, is there a tension between profits and sustainability, or in fact, is there opportunities for making new profits from sustainability? Is that something you could tackle? And I know that you've been very much involved with these positive impact products such as PI bonds, which is an interesting way of taking advantage of sustainability, I guess, from a profits point of view.
Yes, I think, again, there's, first of all, probably no choice. And I really believe that there is a capacity to combine the development of the business, profitable business, with this kind of principles. And I'm happy to say, effectively, Société Générale was a pioneer in trying to define and work and create a working group on this positive impact, where you try to approach what we have to achieve, I would say, with the most holistic, realistic, and pragmatic way, looking at, of course, the benefits, but also sometimes more the negative impacts of certain projects, and try to have a global assessment. I think that, at least certainly that's what we have decided, to put globally our CSR as part of our strategy. What does that mean? It means effectively the business decisions are driven by these kind of goals. Second, effectively deploying a culture and conduct program. We talked a lot about this issue of culture. Culture, I think, goes beyond just complying with the regulation. It's really effectively creating something which will cement the staff, cement their motivation, effectively embark the staff in a kind of positive adventure. Behind, there is also things which are related, such as the way you compensate. And we have included in our compensation schemes objectives regarding CSR. And I must say, in particular, regarding environment, we are a leading bank in energy. How not to think about a strategy to participate to the renewable energy sector, helping our clients to transition. Today, I've seen the progress in this field, which was amazing in the last 10 years. 10 years ago, these technologies were probably not that mature. 10 years ago, they were depending a lot on government subsidy. Today, it is a business where clients are committed, where you can find projects which are sustainable economically and which will beyond participate to a sustainable growth. And so we are very happy, very proud, and of course it meets our own objective in terms of profitability to be one of the leaders in that field.
And what do you do where you have existing loans to projects that are not sustainable, but that are profitable? I mean, how do you deal with that?
Yeah. I believe personally we have to establish and participate to a transition. And if we think in particular how to combine the capacity to limit the temperature, but also to maintain a sustainable growth, in particular in emerging countries. How to think about countries like Africa, or a continent like Africa, India or China. They can't just skip and avoid the traditional energy and move directly towards renewable energy. So what we have to do is participate to the transition according to the 2% transition and limitation to the temperature scenario. We are effectively have committed to finance renewable energy, 100 billion between 2016 and 2020. We stand at 58% of this objective. We have decided very early among the first banks to stop coal new projects. So it means naturally our coal asset portfolio is declining. We have an objective of 19% among our overall energy asset mix. And we try to accompany these players, which might still be involved in coal, in precisely developing new economically viable renewable energies.
Okay, thank you very much. Okay, now what I'm going to do now is I'm going to sort of whisk through some of the individual principles and get some feedback from different CEOs. Now let's go to ICBC, and I unfortunately introduced you as Mr. Shu Gu, but you are actually Mr. Hu Hao, Vice President. So apologies for that, but this is a challenge, this panel, so I'm doing my best. So let me ask you, Mr. Hu Hao, what changes in portfolio exposure, strategy and lending policies are you planning at ICBC to improve your impacts and align with international sustainability targets? And obviously this comes under the category of alignment.
Thank you. Good morning, everyone. Responding to your question, and you're speaking, as you know, ICBC has carried up its economic responsibility and sociability for years. As early as 2008, ICBC adopted a strategy of building a leading green institution, a financial institution. I think which is highly consistent with the goal of principles. In terms of the green credit, for instance, ICBC has made a series of credit policies in more than 60 industries. We, over the years, we have been optimized those policies and those procedures. By doing so, to make sure every loan can be granted to the sector, to the area that is in line with the environmental development. In terms of the green bond, as you know, ICBC is not only the biggest one in the as an underwriter in the domestic market, but also we are the we are the issuer, not just the issuer in the international market. For instance, last year we issued roughly $5 billion in Luxembourg, in Hong Kong, as well in London. So in terms of the green studies, as you know, ICBC is the only one in the world to conduct the environment risk stress testing. We also are the only one in China to take the green rating systems. We are also the only one to take the standards of TCFD. So looking forward, ICBC, will continue to optimize our green credit policy, and we will, to use the green bond as the main method to fund the economy, and also we will enhance our cooperation with our international peers specifically in the rating system, in the information, the disclosure, and the framework of the principles. Thank you.
Okay, thank you. Very interesting that you talk about stress testing there and making sustainable banking part of the stress testing. And it sort of leads us on to the whole sort of area of impact and target setting. And I'd like to turn to Munkhtsetseg Chultemiin from Golomt. And I mean, where do you see Golomt's bank's most significant negative and also potential positive impacts, and where the bank is going to focus its efforts and set its targets to increase its contribution to society's goals in this area?
Okay. Before I answer the question, I would like to take a chance and express that I'm very honored to diversify the group of global banks as not only in terms of gender, but as only local national bank to be present. Okay, so the answer to the question, Mongolia is a small economy. We're heavily relied on mining natural resources. And actually, we are, I think, one of the number one country in terms of livestock per capita. So this will probably tell you a lot about the economy structure. As such, we certainly have major environmental and climate issues in the country, which need to be addressed. However, tackling and addressing this issue is costly and capital intensive. And on top of that, it requires political will and commitment from many stakeholders, such as public, government, private sector, and many interest groups. However, it doesn't mean that we will stay put and inactive, passive around this issue. However, but what I'm thinking now is, well, we alone, as a Golomt bank is, our bank is the first private bank in Mongolia that was established 23 years ago. And all of these principles that we are talking today and sustainable development is fully in line with our beliefs and values of our founders. The bank was founded initially with the purpose of bringing a real impact in the social and economic development of the country. Therefore, for us, for our bank, it is not difficult to accept and follow all of these principles. However, we can't do this alone because we are leading corporate bank in the country, and as such, we have big companies and clients from all sectors, such as mining, energy, and agriculture, and so on.
I mean, does that make it more difficult for you? Because obviously Mongolia does have these big mining projects, and we all know that mining, faces challenges when it comes to the environment. Does that make your situation more challenging, do you think, than perhaps some banks in other countries?
Yes, we are in the same like in other countries. We have biggest deposits in the world in terms of copper and coal as well. So unless we involve other banks in this initiative, we alone will be put out of business. Our clients will run away to our banks, to other banks, if we start making green requirements in our credit
Well,
policy.
you also said it needed political will. Do you feel you've got the political backing to do it?
Well, yes, we,
From
the government,
and the
yes,
stakeholders?
yeah. We have government policy and government framework. The government introduced sustainable development paper, I think 2-3 years ago. And now it's time for private sector to initiate the efforts and actions in this direction. Because of this, the climate change is a global issue, and it goes to local, and even each individual can contribute to this sustainable development. And therefore, it's a real it needs to be collaborative and combine all of our efforts together.
Okay, thank you very much. That's very interesting to get that sort of perspective from Mongolia. Now let's go to Casper Koskull from Nordea, because obviously Norway is very different, and the Nordics are very different kinds of places. They've always had this commitment to the environment. So when you focus Nordea's efforts, and what are the sort of particular things that you look at and take note of? We're saving energy.
First of all, let me also say that I'm extremely pleased, as everybody here, and also honored to be actually a part of this group. This is extremely important for us as a bank, but also this whole bank group, and I believe that the sustainable principles need to be part of our DNA. So it is not about an activity, it's a DNA. It needs to be part of everything we do. When we look at the Nordics, as the largest bank in the Nordic region, we of course touch every aspect of society. And then of course, it's quite clear that the biggest impact we can have is by helping our customers, our investee clients, to actually transform or enable them to transform their business models towards a more sustainable future. So it is about products, services, advice that contribute, that the choices we make together become and lead us to the right direction. So we have a clear responsibility to make sure that there are markets, that there are capital is allocated towards sustainable finance. And in short, to me, it is about mitigating risk. It is about improving resilience and particularly creating opportunities for our customers to create a more kind of sustainable society and future. So it is through our customers where we have absolutely the biggest impact, and that means that we need to incorporate sustainability, as I said, in our DNA, in everything we do, in every dialogue we have with our customers and constituents.
What about this point that Munkhtsetseg made, where if the competition doesn't do it, then it makes it very difficult for one bank to do it. I mean, do you have is that your experience?
No, I think actually when I look today, I think the more and more of the demand comes from the customers. I think we are here again. We do choices together, and if anything, it's we who need to start running faster. I mean, I think I've always said that this is not only the right thing to do; it is the smart thing to do. Ultimately, I mean, if we are not sustainable, what is it? It's a risk. The risk actually increases your cost of capital. And hence is actually financially the right thing to do as well. Of course, it's the right thing to do also for society, but also financially. So I don't see a conflict there, particularly as this is also driven by our constituents, our customers, and the broader society. There is no conflict in this to me.
Okay. All right. Let me now turn to Mr. T.P. Nchocho from Land Bank. And obviously, you're very involved with the agricultural sector, and you're tasked with transforming it and encouraging different agricultural practices and technologies. So, I mean, what really are the challenges there to get all those sort of different stakeholders on side with something like this, with these principles of responsible banking?
Yes, thank you very much. As you say, we are an agricultural finance bank, a development finance institution in South Africa. I think the first issue to mention with regards to stakeholders is that it has to start with the customer base. It will be very difficult to effect changes in the adoption of new practices that are sustainable without the engagement of organized business. So in other words, engaging in conversations in order to establish, first and foremost, a commonality of appreciation of the problem statement. I mean, in South Africa and indeed in the rest of sub-Saharan Africa, we're already seeing significant shifts and changes in environmental manifestations. As a country, we just came out of a massive 3-year drought, but that was then followed by severe rainfalls that are of a thunderous nature and hail patterns and things like that, causing extensive damage to the agricultural sector. So what you then need is to work with clients, but also work with input providers to the agricultural industry, those who develop the chemicals and the fertilizers and other technological inputs that could enhance resilience and greater adoption of more sustainable practices in the sector. But also, the one thing that I would like to mention is that South Africa in particular and certain parts of Sub-Sahara are very water-scarce countries. So practices relating to, firstly, the aggregation of bulk water. Whereas 100 years ago, a country could build huge dams all over the country. Those opportunities are less today. Therefore, efficiencies with regards to drip irrigation and other forms of efficient water use. So in a developing country context, these challenges are even much, much more pronounced. I think my colleagues are here from the Banking Association of South Africa, the big major private banks in South Africa, and I know they're involved as part of this initiative as well.
So when you have a situation like you've had in South Africa where you've had this long drought followed by extreme rainfall, does that convince the wider society and the government that there really is a climate change issue?
As a country, I think, particularly at a policy level, we have, as a country, gone beyond the point of conviction and about the imperative. I think where we are is getting the agricultural industry, organized agriculture, to be more receptive and to be more adoptive of sustainable practices. Obviously, when these kind of initiatives are introduced, the hard question to ask for an entrepreneur is, how does it affect my bottom line? Why should I change from a particular system of irrigation that I've been using for the past 50 years and adopt something new that is more expensive? So it goes back to some of the points that my colleagues were making. It's about advisory and providing a solution that both financially and technically can enhance the sustainability and the financial viability of the client entity.
Okay, very interesting. Okay, now let's turn a little bit to the sort of governance and culture of the bank, because clearly to get these principles established, a lot of things in a bank have to change. So let me turn to Mr. Cho from Shinhan. And can you tell us a little bit about what you think should happen in terms of changing the overall management system in order to enforce the principles, and what kinds of changes you're planning at Shinhan Bank to effectively achieve these results?
Thank you, Mr. Kepler. Yes, I definitely agree with you. A paradigm shift is in corporate management is required to realize a common future that promotes public values. This paradigm shift requires moving away from traditional thinking and ways to do business. Simple engagement in CSR activities that are not linked to the main business is not enough to change the overall social and environmental context. Therefore, I would like to make 3 suggestions as effective measures to promote change within our company. First, I think it is necessary to integrate sustainability issues into business strategies and financial budgets. Studies found that companies that integrate ESG elements into their core activities do better than their peers over the long term. I believe that a sustainable strategy should consider creating values for both the society and shareholders. That is why we are incorporating sustainability into our corporate strategy. By doing so, we are transforming our everyday work into activities that benefit both our customers and societies. In this process, we can also create new growth and business opportunities while managing potential risk effectively. Second, it is necessary to build governance that is in line with the sustainability goals. it is not possible to move forward when the responsibilities for CSR agenda are left to small team separated from the mainstream business development. In 2015, Shinhan has established the CSR committee as a subcommittee of the board of directors. Last month, the CSR committee decided to launch our long-term vision in environment, Eco Transformation 2020. Under this initiative, Shinhan will invest and financially support 20 trillion Korean won in the green industry by 2030.
Okay. Can we leave it there? Because I've got to get a lot of different speakers in. So on the idea of it being led by the CEO, perhaps I could get some input from Christos Megalou at Piraeus. I mean, how, as a CEO, do you sort of lead the cultural change that you need to implement these principles?
Well, the tone has to come from the top. That's extremely important. And I guess all of us here, we endorse and we ascribe to that principle. So that's number one. Number two, I mean, I have been, in the case of Piraeus, I have been leading a big transformation for the bank the last a bit less than 2 years that I am at the helm. And, I felt and I still feel how difficult it is to change the culture, a lot more difficult than, cost cutting or changing the way you do some of the marketing pitches to clients and achieving sometimes less full-time employee numbers and so on. So to be able to lead from the top, have a clear vision, and in our case, and you see how this leads also to the principles we are talking about, the 3 words I kind of had as, the leading words to be able to transform this organization that I'm leading was accountability, meritocracy, and transparency. And they lead quite well with, the work of the principles that we are talking here, because you need to be accountable, you need to be transparent and set targets and achieve them and report them. And of course, you need to deliver what you are promising. So we see a lot of synergies between where generally an organization wants to go with the principles of responsible banking that we are talking here. And that's a framework which, the more banks ascribe to and endorse, it will be a better place to do business.
Okay, thank you very much. Ladies and gentlemen, we're moving into our sort of last half an hour. I will give you an opportunity for questions at the end. Are there any burning questions that anybody's got that they'd like to raise? Gentleman over the back there. Do we have a roving microphone? We're going to give you a microphone from here. One's coming. Very good.
Thank you very much. My name is Johan Vrijns. I'm the director of BankTrack. We're very pleased to see all the commitments of banks to. We're very pleased to see the commitments of banks to sign up to the principles for responsible banking, especially the commitment to align your business with the Paris climate agreements. We can't think of any other way of doing that but by phasing out your investments in the oil and gas and coal industry. And we would very much like to hear from a few CEOs on how you're going to plan this in the next 2 years, how you're going to depart your business from the oil, coal, and gas industry. Thank you very much.
Okay, who would like to take that? Frederick, very bravely volunteered.
No, but let's face it, our world needs still fossil energy. And when you think about the sustainability of our economies and beyond political stability, we need still the fossil energy. As I've said, I think it's building a transition. In our company, we are one of the leaders in energy overall. We have committed very clearly on certain goals in terms of financing renewable energy. We've stopped financing coal projects. We are still financing oil. Gas is absolutely needed. If you want to have less coal in certain economies, you need to have more gas. Let's be realistic. And effectively building a transition, as I've said, towards a portfolio which is reducing in coal, for example, and with a target which is less than 19% of our energy asset in 2020, and accompanying all our clients, and our duty is to be loyal to all our clients in their own transition.
Okay. Casper, do you want to give us an answer to that? Because obviously Norway is a big oil exporter and big oil country. So how do you deal with it?
I think it's, I can only repeat what just was said. Actually, we have pretty much the same principle. We need to transition this together with our clients. We've made the same decision. We do not take either new or finance any new coal investments. That we have actually made very clearly. We are in constant dialogue with our customers on how we together can transition towards a more sustainable future. So I think it is not just pulling away. It's actually actively being part of this transition, and that's the commitment we continue to live up to.
Okay. Thank you very much. Now, look, the principals have got, I mean, we're hearing from a range of very different banks here, aren't we? It's very interesting. And they've got to apply to banks in different contexts with different business models. So I want to go now to Tengku, Zafrul, Aziz, because I want to talk about Islamic banking. And obviously, CIMB is a very important bank for Islamic banking. But perhaps you could give us an idea of how the principles would work alongside Islamic banking principles.
Thank you. Okay, all right.
You're on.
Yep, you're right. Well, just to give you a perspective, Islamic banking in CIMB Group is quite dominant. In the group as a whole, 20% of our balance sheet are Islamic assets across the region. Islamic finance, if we look at the principle of it, looks at maximizing benefit and reducing harm. So we believe in the risk sharing and partnership. And really, it has started long ago, and it's always measured against SDG. So the United Nations SDG share the same objective to Islamic finance. So if you look at it, the CSR is the things that we do on Islamic finance is to reduce poverty, providing affordable financing, linking to zakat, some of it, food security, looking about financial literacy as well as part of that, Islamic finance. And then gender equality. CIMB, for example, believes in this, and we have more women than men in our group. And education, funding towards education, funding towards the schools, and also for the people. Right? So that's, in a nutshell, it's actually similar to what's been said here in what we discussed today.
Okay, and the interesting thing that we were talking about earlier was how the CEO sort of leads the cultural change. I mean, how are you approaching that in your bank?
No, I agree with you. The change has to start from the top, and the senior leadership team has to set the tone right, lead it by example. But most importantly is that culture has to cascade down, right? Where we need to have the infrastructure, the systems to be clear, make it clear to the troops that this is the new vision of the group, where sustainability will be one of the key agenda. And that will be linked at the end of the day back to compensation.
Yeah, and please.
I fully agree with the tone at the top, but what I see happening, not just in our bank, but in many banks, the bottom up is also quite strong. Lots of young people coming into banks, they really come for a different sort of banking, and we should really embrace them and bring them to the top. So I think that's quite important for this sort of initiatives that young people also get motivated by it.
Okay, but I was also at a conference recently where someone turned that around. It was actually the CEO of DBS, Piyush Gupta, and he said, the old people are not. He was talking about technology, but he said, older folks can still get technology and they can still get sustainable development. So we have to work together on this, I think. Let me now turn to Mr. Hu Hao from ICBC, because Mr. Hu, I mean, you know, China, we know, with its rapid economic development, has faced huge environmental challenges, and the government has responded by being a very proactive promoter of green finance. So give us a flavor for how the principles are going to help guide the Chinese banking industry in assisting this green transformation in China.
Yeah, you're right. China now is facing very severe environmental challenge, and the government, the Chinese government, started earlier in the green economy transformation and the green financial system building. Particularly, that started in 2012. So at that time, a lot of policies, measures have been put in place, and according to those policies and measures, Chinese banks have to select data not only over the credit value, but also to the environmental benefits. So here I want to give you two figures. By the end of 2017, the green credit outstanding amounted to of the 21 major banks in China amounted to 8.5 trillion RMB, and last year, China has issued more than 240 billion RMB green bond. So if you look at these figures, that progress have been made significantly. As I said before, the principles for the sustainable development, is highly consistent with the objectives of Chinese economy, also the interest of Chinese banking industry. So that will help Chinese industry to further support the government, the country's economic transformation. First of all, the principles is well targeted and inclusive, and secondly, the principle provide and benchmark practice for Chinese bank industry to achieve the goal of UN Sustainable Development, or also the principles provide a platform for Chinese bank industry to communicate and cooperate between among our international peers. I do believe that with the principles launched, the more and more international banks will endorse the principles. ICBC, as one of the largest banks in China, would like to contribute a lot to this process. We are very happy to join the whole process. With this endeavor together, we believe the world will become more better and better. Thank you.
Okay, that was a great answer. So not just only Chinese banks doing it all together, but everybody doing it all together is what my takeaway from that. Perhaps I could go back now to Munkhtsetseg, and I mean, transparency is a strong theme in the principles, isn't it? How do you see that being done in Golomt banks, so that you actually, everybody can see what's going on, the employees, the management, the shareholders, the customers?
Well, transparency is, for the banking business, transparency is the essential value that we must have. So I do not see any challenge if we start implementing or following the principles or frameworks in the sustainable development. Maybe I did not understand the question, but transparency internally and externally, I don't see why.
Yes, both. I think the thing is, I mean, the reason it's in the principles, it's not only what you do, isn't it? It's the world and society seeing what you do. So, I mean, I guess it involves a lot of things, doesn't it? Perhaps you explained it in the annual report Perhaps you have shareholders meetings where you discuss it. Perhaps you have meetings with the employees where you discuss it, where everybody knows, everybody's on the same page.
In that sense, I see only positive, and we would be really proud and strive to put all our efforts and outcomes in all reports, and try to send the message and show all of our achievements to all stakeholders, especially internally, the bank staff and employees and management team and even shareholders and investors. They will be very proud to see our achievements in sustainable development in the sector and the country.
Okay, thank you. I'm going to open it up for questions in just a second. But Mr. Nchocho, I want you to address the question of what happens to a bank if it doesn't do this? I mean, does it fall, if the banks that don't sign up to the principles, what's going to happen to them? Are they going to fall by the wayside?
The issue is this, that having looked at this particular matter inside the Land and Agricultural Development Bank, it is clear that if we don't do this, if we don't adopt and practice these principles, there will be no agricultural sector to finance in the first place, and the bank itself will suffocate and die a natural death. Because if, for instance, the administration of pesticides and chemicals continues to degrade natural ecosystems in a manner that we see, if we continue on a path where the country uses more than 60% of its raw water for agricultural purposes, and there's no efficiency that is brought into the equation. If we continue on a path where more than 90% of the country's energy is generated through coal, and we don't find diversification that has been talked about here, and ensure the sustainability of not only the agricultural sector, maybe using distributed renewable energy systems, and so on. If we don't adopt these measures, then the very industries that the banks support and out of which the banks derive revenue and their own sustainability will be threatened. I mean, in South Africa, for instance, at the moment, there is a great move. I had the question earlier on about gas, but we have made significant strides in terms of investing in renewables, both solar and wind. But you are aware that our neighbor in South Africa, Mozambique, has in recent years found substantial gas resources. Surely those could be exploited and be put to great developmental use to the extent that the kind of principles that we are discussing here are embraced and practiced with efficacy. Yeah.
Okay, and are you sending a mission to Mozambique?
No, we actually working very closely. Our national infrastructure utilities that are responsible for energy, but also for logistics in terms of developing large container terminals and transportation networks throughout the country and along the coast, are already working on a long-term strategic plan, which is a strong partnership between ourselves and Mozambique as a country in order to address these issues. I mean, our neighbors next door to the north will not be able to rise to any meaningful economic and social upliftment, I'm referring to Zimbabwe, unless the economy, the resuscitation of the economy is driven by sustainability principles. Remember, they also have a lot of potential in terms of land quality and good rainfalls, but still have also significant amounts of gold and platinum reserves as well. So their mining practices, and I was listening to my sister carefully, have to be supported and be supported in a manner that is sustainable. And you will know that the major commercial banks in South Africa, and indeed the major development finance institutions in South Africa, are key players in financing infrastructure and economic development in the rest of Sub-Sahara. So these issues do not only relate to ourselves, South Africa as a country, but certainly have wider regional benefits and implications.
Okay. Right. Well, we've got just a few minutes left now, so I'd like to take some questions. Right, I can see somebody over there. We're going to have to get you a microphone. It's coming down the back here. Great. So if you can say your name and your organization, please.
My name's Peter Milan. I'm the CEO of Transcendent Media Capital. My question is, in line with these new principles, are banks allocating resources for investments into non-financial energy and infrastructure projects? Because you're talking about culture change within organizations, but also a lot of youth and young people are coming up with interesting newer technologies and inventions that can simultaneously help try to prepare our society for climate change, as well as try to obviously reverse the effects. I mean, a lot of the investment is looking at reduction of carbon emissions and things like this, which is absolutely necessary, but the fact is we're already experiencing the effects of climate change now, and preparing our societies and our people and our environment for those effects is equally important at the same time. So is there going to be funding as part of your measurement of social impact in alignment with the policies going to extend outside of your traditional investment strategies?
Okay, investing in renewables. Who'd like to take that? Mr.
No, I was saying that I already commented on increasing investment in South Africa in renewables, but on the issue of social investment, I think it goes into education. If I take the agricultural sector, for instance, one of the biggest problems in this particular sector is that social housing conditions are not very decent for workers on farms in some instances. Schools and education is not the best of quality in these environments. Health services are not brought to rural environments in the most decent of ways. So yes, as an institution, for instance, when we do our appraisal frameworks on projects, we frame that into the financing equation and say there shall be, in addition to financing machinery and plant and equipment and production, there shall be a parallel program of investing in access to social services, decent housing, decent health facilities in a given region, as well as decent schooling systems. But what it requires is that a bank cannot do that alone. Hence the issue of stakeholders that was mentioned earlier on. You then require a huge effort in terms of mobilizing corporate social investment, maybe from the corporate sector, but also government in terms of an input that they can make. So banks are no longer simple credit granting organizations. They are orchestrators of life improving ecosystems, basically.
Yeah, you've got to have all the parts. Peter Blom, you wanted to add to that. As an ethical bank, I'm sure you're investing heavily in renewables, yes?
We do. We have about 1/3 of our balance sheet in renewables. So that's about what the central bank allows us to do. Otherwise, you have concentration limits. But to pick up on your question, what we do more and more is not anymore doing the big wind farms. There are other parties in the market who do that, but there are a lot of community initiatives. And they do not only invest, but they also want to own the grid. What is a very interesting concept, that not a big company owns a grid, but the local community may be serviced by a big utility. So all these new forms of ownership, of different way of commitment, participation, I think is extremely important to let everybody join this transformation. Otherwise, it's just a big corporate, and that will not work. People have to feel empowered and participative. So that's happening, and you can finance that. That's very interesting for banks as well.
Frederick?
And if I just may add a word, I don't know which hopefully fits with your question, but beyond effectively financing renewable as such, there are industries like the shipping industry. Have in mind the shipping industry, which will have to go through a change also in how to limit its own carbon emission through new technology or other different diesel, if you wish, which will require significant investment, and the banking community and ourselves will help the shipping industry to do so. So it's not just financing directly the renewable, but also helping certain sectors to also contribute.
Okay, I can squeeze one more question. I think, oh, there's about 3 over here. All right, we'll try and get 2 in. Okay, I think you were probably first. 1 in this row, and then a lady down here. Sorry, 1 in this row. That's it.
Thank you very much.
The lady down here.
René Carsanti, President, International Capital Market Association. I'd like to ask a question about the possible role of prudential and banking supervisors. To what extent do you think we should explore more by region or globally the differentiated risk associated with sustainable assets or green assets, which could lead either to provide some incentive, capital incentive for green and sustainable, or the reverse, penalizing brown capital penalizing factor. Thank you very much.
Okay, Casper, do you want to have a go at that? Yeah.
I think it can definitely play a big role. We also have an expert group working with the Commission here in Europe, in Brussels, on this. And I would probably move more to penalizing. If you do too much incentives, that may also create some risks that you don't want to see, but I think you can penalize over time. And there's actually a good argument for penalizing, because you're penalizing for long-term risk. And I think it goes very well with the financial language we're using today. So I think that is, I think, something I would encourage. And certainly we are part of a working group thinking about this taxonomy and with the European Commission to actually move towards that. But of course, it needs to be well thought through. But definitely I see potential here.
Okay. Tengku, Zafrul, Aziz, do you want to tackle that? Can you have too many green assets, and then is it too much of a risk?
Yeah. No, well, I think the question was also about engaging the policymakers, right? The regulators, the central banks. So for ASEAN, we have this ASEAN banking integration framework, where we find that to get all 10 ASEAN countries to agree on something is not easy, right? So what we've moved on is to do more bilateral discussion between 2 countries and the central bank. But going forward, I think we are seeing positive traction on this, and we have our own team in various countries to engage the relevant regulators on this. But back to the earlier question, I think what banks are also doing today is to give preferential rates for renewable energy, right? Even all the way up to consumers, where if you have a hybrid car, for example, you get better rates, and we do also push more towards renewable energy financing. Thank you.
Okay, now there's a lady here. Have you got the microphone? Oh, we need to get your microphone. No, it's coming. It's coming.
Thank you. I'm Manal from Casablanca Finance City. My question is on measuring the impact. It's great to witness this great momentum going on globally, but I think we're not quite there yet in terms of results. So I would like to know, what are the KPIs that you follow to ensure that we are aligned with the Paris Agreement objectives and that these measures are having actually some impact? Thank you.
All right, that's a tough one, isn't it? Who'd like to take that? Well, that's ICBC.
Yeah, okay.
That's Mr. Hu.
I can just say one thing from Europe. There is this PCAF initiative. Some big banks are involved in that as well. And they try to measure carbon in the portfolio of assets. And then try to really measure year after year until 2030 and beyond to see how carbon in the portfolio of banks can really reduce. And that is a very concrete KPI banks can refer to. It's not easy. It's quite complicated. And there are different systems. Banks are using different systems. But there is this direction of measuring CO2. A much more difficult one is measuring social inclusion. That is the complicated one. Carbon is doable, I think. Social inclusion will be much more difficult.
Okay, Mr. Hu?
It's a very challenging question for me because, yes, from my point of view, I think for respect of the banking, the bank should have their own measures to look at how the efficiency could be or might be or have been achieved. In ICBC, we have our measures, internal measures, so we can measures what we are, where we are, and what we have done, and the efficiency, what it look like of the efficiency. For instance, we once did the measures in 2017 by the green credit, how the benefits from the environment, what is to what extent, how the environment has been changed. So but I think it's also in the progress. That need the international efforts together to make the uniform measures. Thank you.
Thank you very much. Okay, look, I think my big takeaway from the discussion has been, it has to be not just a bank approach, doesn't it? It has to be a whole social approach. The government has to be involved. All the different stakeholders have to be involved. But I think obviously having something like the principles for responsible banking, these are very useful as a driving tool and a force for kind of putting these things into effect and actually getting other people involved in the whole process. So just to reiterate one or two points that were made earlier, but obviously the principles were in a consultation stage, which is starting today. So go to the UNEP FI webpage and make your comments known there and add your points of view. You can learn more and discuss with the founding banks by visiting the principals stand on the second floor this afternoon and tomorrow. And you can also show your support and join the initiative by becoming an endorser. And you have to go to the UNEP FI webpage to do that. And now my last duty before lunch is to thank our excellent team. Thank you very much. Please give them a big round of applause.